Welcome back, YouTube. Are you wanting to buy a house but just kind of confused how to calculate your mortgage payment or how to understand how your mortgage payment is made up? Because today, what we're going to be going over is the 4 simple steps on how to understand how your mortgage payment is
Guys, so
calculated. Make sure
super,
you stay
super
tuned and let's get right into it. Welcome back. So
something for you
before we get
guys.
into it, go ahead and go in the description area where it says resources. It's resources for you guys. Go and download the free list that I have put together of the top 10 homebuyer programs of 2022. These 10 programs are, I'm using them each and every day to get my clients into homes, and they're really helping my clients take advantage of the home buying process and actually succeeding with their home buying process and, helping them achieve their goal of home ownership. So that list is in the description. Go ahead and download that list. So let's go over the first thing. First thing you need to think about is your principal. Your principal. So basically, what your principal is, let's say your home is $300,000 and you have a 30-year loan, right? And there's 12 months in a year. So 12 times 30 years is 360 months, right? So 360 months is basically what your principal payment is, or you're going to be paying your principal payment 360 months, right? So basically take that $300,000 and divide it by 360 and you should get $833 and some change, right? So that's how you come up with your principal. It's basically your payment without any interest, without anything, right? So your principal is specifically on the principal amount of your home, right? So $300,000, your principal, right? And you're going to divide that by 360 months because there's 12 months in a year, and let's say you have a mortgage for 30 years. And so that comes out to $833 and some change. So that would be your principal portion of your payment. Now, second thing to remember is your interest. Interest is what you're paying the bank, the lender, whoever lent you the money. The interest is what they're making off of you, right? For lending you the money. So your interest rate could be 4%, 5%, 6%, 7% plus, right? Depending on your credit score. Your credit score is a direct impact of what your interest is. That's why it's super important to understand how your credit will affect your interest rate, because over a 30-year mortgage payment, that could be the difference of, $50,000 to $100,000, right? Let's say you have a lower credit score, let's say it's 600, and you get a 8% interest rate, right? Rather if you had a 750, 800 credit score, you could get a 5% interest rate or something like that. The difference of 2-3% can be a difference of $50,000 to $100,000 over a 30-year mortgage payment. So it's super important to understand how credit really affects your interest rate, right? And so that's the second thing, the second factor of how your mortgage payment is calculated: interest. So remember, first thing is principal, second thing is interest. So third thing that you're going to remember is your taxes. Taxes is the third thing that affects your mortgage payment, right? And your taxes is based off of your tax rate of where you're living, right? So somebody more outside of the city might have a lower tax rate than someone more closer to the city, right? And this just because, the closer you are to the city, the higher your tax rate is. That's just kind of how it is. So if you live more so in like a rural area, your tax rate might not be as high. So your tax rate, it could be, let's just say a 2.5%, right? And you're going to take 2.5% of what your purchase price of your home is. Let's say $300,000. You're going to take 2.5%. And you're going to pay that yearly on your mortgage payment. And typically people don't, pay all of their taxes once a year, right? They typically take that payment and they'll divide it up into 12 months and they'll just add that into their mortgage payment. That's why I added in taxes. You could take out the taxes portion of your mortgage payment and just pay it, every year, right? But most people, they'll divide it up into 12 months so that it's not as big of a hit. So that's the third thing that affects your mortgage payment, your taxes. So remember, P is for principal, I is for interest, T is for taxes. Now, the fourth thing that affects your mortgage payment is your insurance, your home insurance, right? And so that's why it's always good to shop at least once a year, because you can change your home insurance, as much as you want, but it's good to shop and see what rates are out there, right? So that they can stay competitive. And so typically, your insurance payment is also divided up into 12 months because you'll pay, yearly. And instead of paying, one time a year, you can pay, divide it up into 12 months, just like your taxes, so that it's not as big of a hit. So it's going to be over 12 months, as well as your taxes on top of your interest and your principal. And so that's kind of the four elements that really makes up your mortgage payment. I like to call it PITI. Principal, interest, taxes, and insurance, okay? And remember, taxes and insurance, you don't necessarily have to add that into your mortgage payment, but most people do, just because, they might not have the upfront funds to pay all of their taxes for the year or their entire insurance premium for the year, right? So they divide it up into 12 months. And so all four of those elements would be included in calculating their mortgage payment. So it's really, really good to understand how those, what each of those things are: principal, interest, taxes, insurance. It's really good to understand what those four things are and really how they, affect your mortgage payment. So that's about it for today. Now, if you're looking to purchase a home within the next 6 to 12 months, go ahead and check out our resources section in the description, and we have some resources for you if you don't know where to start, or if you're having some trouble, and just some information for you to take a look at, and just good to know if you're looking to buy a home within the next 6 to 12 months. Hope this video helped. Go ahead and like and subscribe. Coming and dropping plenty of videos every single week, guys. So please like and subscribe, and I'll see you guys next time.